Hello from Chicago. Alan Knuckman, high above the trading floor at the CME Group, talking energy with the focus on crude. It was quiet a bit last week. We did not make new highs, which is news in itself, but we have a comeback a little bit here, a rebound from the Friday 62.75 low. Now let's remember that was a 10-day low, so a bit of a pullback after not making new highs. We saw some unwinding, some profit taking. So we've rebounded from that. Today we closed at 63.60, actually up 30 cents. So what we saw today was a higher high and a higher low than we've had on Friday. So that's a positive from a technical standpoint, building some strength. And the peak today was at 64.15, closing in again on that 65 that we've talked about. Speaking of talk, we had some tough talk overnight out of OPEC. You had Saudi Arabia and Russia both talking tough, their oil ministers saying that they consent to continue these oil cuts in the future. Now, they're trying to be tough with this talk here, and the main reason for it, truth be told, is because Saudi Arabia has their Aramco IPO, which is going to be the largest IPO in the history of the world. That's coming out this fall, and it benefits from high oil prices. So it's in their best interest, and again, follow the money, it's in their best interest to keep oil prices at these elevated levels for that IPO. They're gonna benefit from that. So looking at other news, we want to talk about how we can't drive 65. We've talked about 65. We got to 64.50, I think not last week, but the week before. So got very close to that level, but not quite there. That is the elusive target. I guess it's not that elusive. I'm just impatient. It's an elusive target from the breakout of that $45 to $55 range that crude was in for a year. That target's $65. Keep it simple, silly, is what I try and do. So 65 is the first target, and then above that, I'm looking at $70, which is the halfway point of the 2014 peak to the 2016 lows. The first stop, obviously, is 65. If we can push through that, then we can be looking at 66.50, just a very basic retracement. Let's remember, we had rallied to 64.50 highs. The dip last week was down to a $2 dip. So we've recovered, and if we get back to that, have a V recovery back to that high, that target's 66.50. So we've got a lot of things on the upside to measure the strength of the market, and that's what we have to do with this strong trend: is see how crude acts when it gets to these key levels, how it pushes through or fails to push through, and that'll give us some further clues. So net crude oil up 30 cents. We've got inventory data coming out Tuesday and Wednesday, so that could be another catalyst for the market, another push to the upside. Alan Knuckman here at the CME Group in Chicago.